It's the weekly 30/30 trading list on the ASX. We're looking at the 30 strongest momentum companies over the last quarter and this week's 30 best launchpad stocks. These companies that we're looking to be primed and break out of bases if we can find them. We've got Gary Glover guiding us through the list to pick his favourite charts. Good morning, Gary. How are you?
I'm great, Chris. How you going?
Well, I'm excited to see you work through this list because for the last couple of weeks, you've picked up a few things like gold and you've said you wanted to start trading those and they moved through the launchpad and into momentum. So you've been on the right side of the market and picked a fair few winners in the portfolio, and your Tuesday videos has done very well. So if we have a look at the momentum list this week, what's catching your eye?
Yeah, so the number one stock there, I always like to start with the number one there, is the IGL, which is the Ivegroup. So this is interesting, actually. Obviously, apart from being the strongest stock on the board for the quarter, it also had an upgrade there. So I think might have been the second or third day up off the low there in June. So it might have been actually this day here. Pretty sure that was the day, 22nd of June. I think that was basically, it reported there, or basically sort of, gave some pretty positive guidance upgrade there. And as a result here, the stocks continue to rally on the back of that. So a bit light in here, but it kind of goes to a bit of a thesis we talked about the last couple of weeks there. Something around, obviously Megaport was another one, which is in the list as well, which had a pretty positive update and since then sort of gone on. So we saw here that this IGL had a good update here and then pretty much has really gone on with it. And so that's that sort of thesis is there. Sort of once you get a pretty positive upgrade, something which moves the needle fundamentally, then usually you get a bit of follow through technically as well, which has definitely been the case here. So, if we do get a really positive upgrade, something out of the box, we should be keeping an eye on that. That was number two, not too much in there. The Zip was number three. Again, not something I would look at here. I just think there's a lot of risk here. To me, there's no surprise to sort of see a move like that. All the big volume there, Chris, too. That's just drawn, because we've got all these sellers, all these buyers down here underwater, all the way down to the low. There's going to be, anytime we get a bit of a bounce here, there's going to be lots of disappointed buyers along the way here, just looking to sort of try and reduce some carnage, try and trim some back here. So that's why I won't, just because of that trend there, so much overhead pressure there. So
just on that chart you've got there, so is it constructive to see the up days, but you're concerned that the biggest volume day, constructive to see on the up days good volume, but your concern is that the biggest volume day is a down day?
Yeah, exactly. Yeah, well, that's what we know about stocks that have been in these really ugly downtrends there, sort of those leading sectors which now become not leading. And yeah, so the problem is here, you've got, it's like that the whole thesis, what's the, with momentum stocks there, the whole thesis is to sort of, you're not buying low, selling high. You're buying high, selling higher. That's the thesis of a momentum stock, is that they just keep going to new highs, and so there's no sort of buyers in the past. Yeah, well, there's no buyers in the past that are sort of looking to get out because no one's bought there before. So whereas all the way here, there's people that bought the stock from $8 all the way down to 50 cents. So really, there's disappointment for the last year, and anyone who's bought the stock. So anytime it rallies, some of those, that year of disappointment there will be like, if I just get back to $1 or back to $1.50, or if I can just cut my loss in half, or cut my loss in a quarter, or I'll dump it in any rally. So that's what happens. That's why it's sort of hard for these stocks to get out of the funk. So no surprise here with this sort of stuff as well. So I mean, it's probably irrelevant that they don't make any money, because they never made any money from the start. But we just have so much overhead disappointment here from the past. That's gonna really keep a lid on it. Because like a lot of leading sectors, that they're often not that profitable. They might just have really strong revenue growth. But if you do have strong revenue growth and you do have great profit growth, then they're the leaders that really hit it out of the park.
And that's part of the VC VCP criteria, isn't it?
Yeah, that's right. Yeah. So in the past, we've seen, look, obviously in the last few years, we saw a lot of stocks that weren't profitable, but just, market was really concerned about revenue line, those companies that really had the pretty strong revenue lines and pretty poor profit lines, they're the ones that have been hit the hardest. So, and now, some common sense is taking place in the market, whereas the profit line, profitability, earnings, that's definitely, more of a consideration. But it's the stages you go through the market. Obviously, when you're still, the bull market starts, it starts with the big caps, safe stocks, and then you sort of start to de-risk, then the mid caps start to move, and then as people get less risk averse, then you start buying the small caps, and then in the final stages of the bull market, you're just buying the riskiest stuff, because that's the riskiest stuff is the stuff that's flying. That's the end of the move. So you sort of go through the different stages of risk, and that should sort of guide you through the stages of the market as well. So when you're buying the shittier stocks that don't make any money, that's usually telling you that you're in the final stages of the bull market. So and then when we start turning up here, it's all the safe stocks that move first, and then you start to go through a bit more risk, and then we've just seen some of the better growth names have a bit of pop. So and then the last thing you see is the shittiest growth names sort of pop as well. So it's again, just that's the sort of, each sort of cycle is quite different there. One stock I thought looked pretty good. So Silex, which is been number one for a while, I think starting to fade. Last week went down to 6. Might still number 6 here now, but they're starting to sort of consolidate here. So starting to go through a bit of a breather. So this is either going to go sideways for a while, or it's going to come back down. Looks like it's sort of started to consolidate. Not a lot of volume through there so far, so that's.
Could that be a high and tight flag if it congests and pops?
Yeah, it would need a bit more time here. You would need a bit more time. You would need to sort of see, you just need to see just sort of something correct with it. It's used a lot of time to get up there. You want to sort of see it have a sort of sideways correction and use a bit more time up there. So Paradigm's had a bit of a pop there. So obviously, like that Telix is pharmaceutical. So we're talking about sort of healthcare and biotech. That's been a lot of the big movers in the. And then recently we had a few golds in there, and we had a few lithium stocks there as well recently. So, so interesting Paradigms in the right sector. Obviously, another biotech's had a bit of a pop here, but not one for me personally. Just because look how light here. There's really not much volume here. Really, just had that sort of pops come at the end, and then we've seen volume selling as well. So that's like, that's why I won't. There's not one that I would touch.
So you'd want to see more in that basing pattern from late June to July, would you? A bit more churning over at the bottom? That's right.
We showed, I think, CUV, which is in the list, that had a bit more volume coming in here. It's a bit more building, and then still that good volume through there as well. Nice. This is sort of one that I've got one that I've recommended in my newsletter. And obviously the Polynovo was the other one that was on the list the last few weeks as well. That had good volume here, good volume again, good volume again. So still holding up pretty well here. So those ones are better signs of building here rather than just a pop. The Paradigm is just a little bit of a, just had a pop here and no volume here. It's just sort of pushed up here. So it's not tricky to trade. Also just not the best sort of signs here. So you probably wanted to see a bit more. One actually did catch my eye actually was KCN there, just because this is like the old VCP pattern here, Chris. And I thought once we actually break above this little swing high, that would have been, for me, a little bit of a starting posse here. And then once we break above this other high here, that should have been add to me as well, or maybe just a trend line off the top here or something might have been add here. But that's my first point there. First signs of strength there. Okay, volume would have been great. Maybe trend line might have been the second sign of strength, and then breaking above this high will be my first thought, my third sign there. So right now it'd be probably, my trading technique would have been a starting position, maybe a secondary position, and then maybe a third position there if I get up to maximum there. And then hopefully by now my stops are break even, because my net position might be sort of something down here.
Across all three entries.
Yeah, I've scaled up here. I've got a bit of a win under my belt, and then but my risk would be the same, you know. So if I started to say risk 1% down here, then I'm up here, then I've really only risk 1% on the next position, and then risk 1% on this position, because obviously the stops have gone to even on the other two posies. So I never really extend my risk on my trade, but I'm able to sort of scale up into size here. And then if it moves, bang, then I kill it. And if it moves against me, then I've only risked 1%. I sort of, you know, even though I've built the position, it can be a bit frustrating, but the way I look at it is you've got to get to your, you know, if you can get a starting position and you can scale up, and then you get yourself to, you know, you get yourself in a position to potentially get a big move. If it moves against you, then that's fine. It's just, you just got to follow your process. That's the key with trading. So if you've got your steps down pat, you gave a chance to win, it's fine. That's why I think we're sort of saying on Tuesday, when do we take profits from this market here? Well, it has sort of had a good run, but you've got to give yourself a chance to win as well. So got to follow your process. And yeah, I mean, I know sometimes if it has a bit of a pop, I might lighten a little bit off, but you sort of got to try and trade into your plan, follow your process, and just go through it there. So every and again, you might have an adjustment there. If the market looks a little bit, you know, you've got to be flexible as a trader as well. You can sort of shift.
So just on, well, if you had that entry on the initial one, you'd be risking 1%, your risk to reward way down low might be 5 to 1 or 9 to 1 or something like that. Your second entry on the downtrend, you've moved the first position at least to break even. So you knew your second entry, you're only risking 1%, but you're going to have at least a 3 to 1 for this second entry, aren't you?
Yeah, that's right. Yeah. So the whole net position should be 3 for 1 risk reward on the whole lot. Yeah. So
by the time you've got that third one, you've got maybe 9% upside on your portfolio or more, but only 1% downside.
Yeah. And if I can scale up, say I started with say like an 8 or 10% of my portfolio position, and then another 7 or 8, another, so like Minervini and stuff there, I think he goes to like 25% of his account can go into one stock, which is pretty big. So I've just been working on 20%. So usually it's like 10% at 10%, or I just go, you know, like an 8, 8 and 7 or something like that, or, you know, but depending on the position. But I usually 8 to 10% is sort of my starting position, and then another 8 to 10%. And then, that's usually it. Sometimes I might get another chance to add to it. And then a great one was sort of Northern Star here. I mean, this was a little wedge, and I think we sort of talked about this one a while back there. Once we popped out of this, I got a little starting position, and then little consolidation. Once I sort of seen, that looked like it was off here. Good, might have been good volume in here somewhere. Good strong volumes there. Might have just added to it. Run a bit hot here. I thought, oh, this looks like it's going to maybe consolidate, so I might have trimmed some in here. And then after 2 days of going nowhere, I thought, oh, this looks like it's going to go. It's a little flag here. It's going to pop. So quickly add my position back. If you look at all the other gold stocks as well, Evolution, all that, it's just pop and then little sideways move here. So when you see these little sideways little flags here, that's not how markets. That's just a little cool off here. That's all it's got for cool off there. You know, it's going to go higher. So
the selling pressure doesn't come in when it's sort of the rally takes a pause. The sellers haven't flooded in like a zip. It's sort of held its ground.
Yeah. So that new Northern Star, because I sort of like I got a good move there, and it's running pretty hot. But then I trimmed a little bit into that heat, because I thought that's not normally my sort of style, is to sort of take a little bit off the top, and then if it pulls back, I'll come back in. But after 2 or 3 days, I just realized, shit, this is not selling off. This, because we know sort of with gold in the past, we're sort of showing the weeklies. It's like oil and coal. Once they get in the groove, they can just kind of keep going. So I just sort of thought, well, shit, okay, better get my full position back on. So I think I saved myself 4 cents or something trying to leg out, but at least I sort of got back in. So you just got to be a little bit adjustable a little bit sometimes. So I've got my methodology that I like to sort of build in position. I like to sort of scale out a little bit as well if I see something have a little pop. But then if I think something's going to have a bigger move, I've got to be adjustable as well. So, you've got your rules, but you sort of got to adjust a little bit as well. That's probably, Let's get on to the charts here. So Kogan was another one that's had a bit of a pop. good volume there, but again, like volume all the way through, just that 1 day pop there. So you would probably want to see this consolidate here, volume dry up, which it has done. So, you know, just sort of watch that a bit closer. That's sort of one on the radar. MP1, which we sort of mentioned there, had that was the day it got upgraded, and then obviously since then it's gone higher. Had this little relief here, but we saw a lot of stocks have this. We saw, I think Aussie Broadband had the relief of that. PointsBet over this relief. I mean, even sort of 360, which is on the list as well. I think 360 is on our list, the next one. Even that had a few, you know, those are quite sharp moves percentage-wise as well in the moves, but they've sort of kept going as well. So it's interesting. It's just sort of these high growth ones. They can move fast, but then they can cool off fast. That's a pretty volatile market here, but it's pretty constructive here. Look at this sort of 3 or 4 days on the side here. Just really just sort of sat on top of that move, you almost might sort of say there. Popped again, another little, you know, 3 or 4 days sort of side again. Again, when it goes down, it doesn't really get far down. The volume's pretty light. It's not showing signs of sort of weakness, is it? So that's when you sort of pop again. So yeah, this is this sort of, you know, 0, 1, 2, 3 pattern as well we talked about last week. If you're waiting for those 3 high lows, that's when you can sort of start to get going. So even that 0, 1, 2, 3 pattern, you might think, oh, I feel like I'm late here, but you've avoided the little ABC pattern and you've got 3 high lows, then you've got sort of something to work on. So yeah, well, there's some interesting moves here. Definitely a bit stronger than a lot of people were anticipating. But yeah, Temple and Webster was sort of one that's popped here. But again, it's sort of probably drawn a bit of volume at the high. But now we just need to see a little, you know, we see a little ABC pull back here on light volume, which so far, light volume, light volume, light volume. We just need to see a little, you know, we did a little ABC back down to somewhere in the range here. That could be interesting. So definitely one to keep on the radar. CUV, as I mentioned, it's, you know, a biotech, you know, we're shown here and they're on the launch pad there obviously a few weeks back. Yeah, and obviously sort of relatively pretty strong here, so good volumes as well. So that sector is definitely pretty good. Bigtincan Holdings was actually one that I believe this actually had a pretty good update, Chris, somewhere in here. Might have been one of these days in here had a, the numbers were pretty good. So I think it had like a, so again, basically the stocks had an upgrade, got some really good numbers there, surprise on the upside. And what's the stock done? Just continue to climb here. So, and again, we've got this, you know, 0, maybe 1, 2, 3, or 0, 1, 2, 3, wherever you look at it. I mean, that would have been a good, that's a cracking signal right there. Basically, you know, starting to build.
Swing high.
Yeah, just come back, sit on top of there, all that volume there, all that, no selling at all, 1, 2, 3. So probably, maybe someone knew a good report was coming. Started to hold here, that would have been a good little trigger day there. Still staying nice and lean, and then, yeah. So yeah, just got to kind of drill in here and sort of see these patterns. But yeah, there's plenty of signals going on. So I'm finding it easy to trade here, and I'm usually pretty hard judge. So yeah. So Santa Barbara's had a pretty good move too. That nice sort of move, good volumes down in the low here, sort of building here. Just yeah. So again, that's another this sort of sector here. You just sort of see they can really move here if you drill into the weeklies and stuff there. Once they pop these, you know, these gold stocks here, they can just really they can go. So you sort of don't know. It's one here. I really like to sort of take a little bit of partial into sort of strength there, but when I know the characteristics of a sector, you have to sort of take that into consideration as well. Just sort of really good motor here. So, you know, maybe something using the 10-day or a 20-day moving average or something there. Maybe just keep edging that higher as it moves. So that's our quarterly ones there. Number one on our day, on our weekly sort of moves is obviously Paradigm's had a pop here, but it's not one that I am that keen on there. I think there's a few other things in there. There's a stock in here, Qual, which I didn't really know. So I think this one's like a finance and bridging loans and stuff there. So don't know much about them, sort of put on my radar to keep an eye on, but not sure about that sector. A2 Milk's had a bit of a pop. pretty interesting. So some okay sort of volumes in here. The only thing I thought about here was the weekly is there's a big level here. See that sort of stock there is sort of in the past that was sort of broke through there and then tipped over. So probably want to see it go back above there, but potentially this stock might have turned here. So definitely starting to break to new highs in here. So obviously breaking back in here, a little potentially a small little VCP in there. Just a bit of a mean downtrend. So you want to sort of see something here, but that's one to keep an eye on here. Potentially that might have turned. Integral Diagnostics had a nice pop here. I think this was a fundamental news as well. So a bit of a positive update. So we know what happens there. Normally a bit of a drive there. Maybe you'll have a little consolidation. So that's interesting. Some of the weekly ones there wasn't sort of a few maybes for me. Just that's moved up okay, but okay volume. RAP was, again, that's pretty messy. I don't know how you trade that one. Pretty small as well. PIA was Bengalic, just like another equity name. So again, equity markets have bounced here. So this has had a bit of a bounce, but yeah, not sure that one there. One of the stocks I thought was pretty interesting was actually Bravura, because it's been a pretty mean downtrend for a while. So it's starting to look like it's sort of shaping up here, but no volume, Chris. So we've got a mean downtrend like this, pretty ugly. So it does look like it's actually starting to break up here, but can't see any, can see no conviction in the buying here so far. Very, very light here. So that would make it an avoid for me. Healius is probably one of the more interesting ones here, because the stock here was really caught in this 360, 380 band. So we almost call that like a Davis box or a rectangle. And then once we closed out of that, so look at the day we've closed out of that, and what
off it goes.
Yeah, good volume. So you could be, could be watching this. I know it's a bit of a tight range. I didn't really give you a big marker there, but sometimes we just need to break out of these on good volume. Put our stop in back under, here somewhere. Yeah, see how she goes. So she's moved up quite nicely there. Some good volume that day through. So yeah. So you don't see too many rectangles like this. Used to see them in previous years, but I haven't seen too many in recent years. This is another one that looked okay. Symbio Holdings there. Some okay volumes here. We have got our, like one high low, second high low. So maybe starting to build something here. But
would you look for a 0, 1, 2, 3 in there, or see what happens?
Yeah, possibly there. The volumes aren't bad. So we had some okay volume in the green there, dried up, some okay volume again, dried up again, good volume again. So that's actually, so yeah, if I saw this sort of drift back into here, still on top of the old high there, might be sort of something to keep an eye on. So it's definitely one that I sort of circled, put on my list. Obviously we talked about Santa Barbara. The other one I thought, this is actually one that I thought about trading myself here, just because, again, we sort of got our low in here, had a bit of a pop, pulled back, sort of high low, went to a new high. I like to see that. Come back, made another sort of high low, had a bit of a pop again. Some actually good volume in here as well. So we saw not bad volume through here, not bad volume through here, low volume on the dry up, low volume on the dry up. Good little pop volume and dry up again. Good volume coming in. So at this point here, I thought, oh, gee, this thing's sort of starting to get, there's our sort of 0, 1, 2, 3 pattern there, starting to sort of build here. So this was a good, I thought this was interesting, the sort of day here. Once we popped above that high, that was definitely getting me more interested as well. And then we saw a couple of little shuffle days as well. Oh, that looks pretty cool. Hardly sold off and then popped here. So also thinking about SEEK here, I mean, geez, what's the one issue that every employer in the country's got at the moment?
They cannot find the staff.
Yeah, can't tell me they're not all advertising on SEEK, trying to get staff here. Putting, I mean, I'm down in Melbourne once every 3 weeks, and mate, every shop front window has got an advertisement on it. So for staff and employers. So
I did notice that in the airport last time I was there.
Yeah. So you can't tell me that SEEK can't. Oh, gee, there must be it must be, taking a few. I mean, I just couldn't fathom how they're not going to have a good result there. I mean, maybe someone else can have another point of view there, but geez, I just thought, yeah. So that looked kind of interesting to me. So starting to build here. Yeah, obviously getting above the 50-day moving average, that's always a big thing for me too, once we sort of start cracking there. But this was kind of like an exhaustion of our sellers there. I'm starting to see the volume pick up. So this is not a bad looking chart here. So yeah. So things like car sales, I think, might have been on the list the last couple of weeks. So started to break up as well, little consolidations and then pops. Yeah, even I think Domino's was the other one that sort of, yeah, hasn't got going here, Domino's. It's sort of really been more of a grind here, but struggling to go down as well. So still staying above the 50. So to me, I'd probably just have my stop just a little bit under here. But yeah, this one's not as strong as some of the others, but yeah.
Well, given you've got so many to choose from, it's probably lower on the list.
Yeah, so yeah. But yeah, but look, market looks pretty good. There was sort of some timing yesterday for a possible peak in the market, but my preferred timing is really up around that mid to late August for a peak here. So market's still holding on pretty well. We just might slow down here. We've had a really good jump. You just might get a bit choppier here, but there's still plenty happening within under the current here. So there's some decent moves. Stock's still sort of moving here. Just definitely seeing a bit of volatility there. So got to be a little bit patient. Sort of trading a bit small with some of the stuff and then just sort of adding into it once we get confirmation. But seems like you're sort of popping and then coming back and then popping, coming back. So if you're patient now, you can wait for that consolidation to sort of maybe come back and add to your position. So, but yeah, that's it. Hopefully, I know there's a few questions about sort of how we, how I normally trade and stuff there. So I tried to illustrate a little bit of that without giving away all my secrets. But yeah, the main thing there is just, I think as a trader, you just got to have your process, Chris. You yeah, don't count your dollars. Don't look at your P&L. I really just look at my total account. I like to just see what my total balance has gone up or down each day. That's as far as I go. Pretty much everything else is really about managing the risk. So yeah, I never really want to risk any more than 1% of my capital. Ideally, if it's a bit less than that, if it's around about 0.5 or 0.7 or 0.8. But yeah, if I want to give myself a lot more room, I'm really keen on something. Sort of 1% is that's my ultimate maximum risk that I'll put down for any trade.
Right. Well, that's 1% capital at risk for the trade, and let's say you're putting $1,000 at risk, you're looking for at least $3,000 upside, are you?
Yeah, 100%. So 3 to 1 is my minimum. Usually, if I look at the technical pattern where I think I can get to, and hopefully I'm 3 is my minimum, but I'm usually looking for like a 4 or 5 times move here. And sometimes you get some bigger ones like a 6 to 8 if you get something really tightened up and you think it can pop. But yeah, I'd probably sort of say something between 4 and 5 is probably where I would sort of sit. And the 3 to 1s probably oftentimes they're more, they're more your sort of blue chippy, sort of safer sort of moves there. So like you might be trading a Westpac, risking $1 to make $3. It's a $3 move on Westpac's pretty big move. So yeah, so probably tighter for some of the steadier ones and probably a little wider for some of the ones that rock it out a bit harder. So but still got to follow your risk parameters. That's the imperative. It's yeah. I mean, if you read Minervini sort of covers risk management really well. Yeah, the dollars, the percentages, the quotients of bet sizes and risk management and what numbers work best. And yeah, it's actually quite interesting, really quite revealing. And so yeah, I've definitely tried to fall into more of his line, and I can say unequivocally that it's definitely helped with my P&L. It's really, yeah, it's a scaling in risk management, just the right sort of size, right sort of risk. Yeah, follow the process. Like, do not look at your P&L. Just don't look at the individual, what you're up and down every day. Just, yeah. Don't ignore it. Yeah, you don't ignore it, but you just don't. I used to stare at my P&L and think, oh, gee, I'm up $2,000, I'm up $4,000, I'm up $5,000. Geez, I should should I take it off? Should I, I'm down 800. Ooh, should I, just follow your process. Just create a process, think about it, how it's going to fit out, do your maths on it, just use logic, and then, just sort of just step away from, it's weird. I've for years, I kept hearing people talk about the emotionality of markets and stuff there. And there was a really good piece there called Emotion-Free Trading by Larry Levine, which you can actually Google for free. It's actually a really good article. But when traders say they don't look at the P&L, I think, well, never really made sense to me until this year. So, but you just got to distance yourself from it. Just focus on the process. That's the one thing that sort of really hit home this year, is just getting that right. And then everything else will just fall in place.
Well, it definitely has shown up in your portfolio. That's the Tuesday videos and the insights that you're talking about, how and when and how you manage the trades. We could probably use that point to segue and say, well, let's click on screen and you can have a look at that whole Tuesday series. And you mentioned Mark Minervini, he's the creator of the volatility contraction pattern that you've mentioned a couple of times today. We'll put that on screen as well to click through to that tutorial that talks about it. And also, importantly in that, you mentioned risk management, and that's part of the VCP strategy as well, isn't it? How to sort of manage the trade and the entry.
Yeah, that's right. I mean, the risk management. That's it's funny. I've listened to the thing about lockdowns was I was listening to Chat with Traders, like the podcast. So every day for a couple of years, I was pretty much going for a walk and listening to traders, and that 99% of them talk about risk management as the key. Yeah. So we keep hearing that. Everyone's, as a trader, you're more excited about
entries.
Entries and money you're going to make. All this stuff. Just get your risk management down pat. Get the process down pat. Review your trades. That's the one thing I've also done a lot of in the last couple of years. And that is really revealing as well. If you go back and look at just go and print off your last years of trading, and just go and analyze your last year of trading. That'll tell you a lot about what you're doing right, what you're doing wrong, what you need to improve on. And you can do that. That is a major sort of game changer as well. It's funny, sort of as traders there, we tend to move on to the next trade. We don't look back. You don't want to emotionally sort of be, if you lose money or you do something wrong, it doesn't matter. If you followed your process and you got stopped out, that's fine. You've done everything right. So you do move on, but it is important to go back and review your trades. It's as a trader trying to learn more, that will reveal a lot about who you are, your weaknesses, your strengths, and what you need to improve on. And you can go away and work on that, or you can make an adjustment to that. So for me, I was trading too much. I need to trade less. I was trying to be too tight, trying to basically maximize my profit too much. I need to give myself room to win. So these are things you learn as you review, and then you make adjustments, and then all of a sudden your performance starts improving. So review, process. Just take the emotion out of it. That's imperative.
Well, they're very good lessons to end on, and maybe something to explore in greater detail at another time. But for this Friday, that's plenty of charts and plenty of things to scan for the weekend.
We gotten too deep, sorry.
Good. Thank you, Gary Glover from Novus Capital.
Thanks, Chris.